Hello, everybody, and welcome to the Trading with Ashley show. I have so much to share with you in this video, and I think you're going to love it because it has to do with 5 popular stocks that retail traders love to trade. We will be reviewing AST SpaceMobile, ticker symbol ASTS, Nebius Group, ticker symbol NBIS, Joby Aviation, ticker symbol JOBY, SoundHound AI, ticker symbol SOUN, and finally, Rocket Lab, ticker symbol RKLB. Now, all of these stocks, as wonderful and as fun as they are to trade with their high premiums, they all fall under one category that I put them in, and that is speculative. Why do I put them in the speculative category? Because they have yet to have 4 quarters in a row of GAAP profitability. Now, all stocks that end up becoming great stocks, even the Mag 7, they started off as speculative stocks. And there's room in everyone's portfolio for speculative stocks. They're fun to trade, and you could end up with a really big winner like I did with Palantir. But it's important to note that you don't have too much into any one speculative stock because most of them follow the 80-50 rule. Simply put, the 80-50 rule is that 80% of stocks will fall 50% or more, and 50% of stocks will fall 80% or more. Keeping that in mind, it's much more likely to show up in stocks that have yet to turn a profit because we all know when the market's under pressure, these stocks that fall into the speculative category, they are one of the first ones for investors and retail traders to drop because you want a sure thing when the market's under pressure. You don't know how long the market will be under pressure, and there's not a whole lot of room in our portfolios for speculative stocks when things are starting to fall. We want good quality companies at that point that have a proven business model. But I thought it would be helpful today if I took you through 5 of these very popular stocks and we look at what would be considered a fair entry. After all, we don't have a whole lot of fundamentals to go off of. We really just have technical analysis, and some of them haven't been around long enough to really put together a good technical analysis case for them. So I'm going to use the 80-50 rule, and we are going to look at what a fair entry would be for some of these stocks. I think you'll find it very eye-opening, and you might want to take notes on this one or do a few screenshots and set alerts so that when the time is right, you can go ahead and jump in and buy your favorite stocks on a discount and get ready for the eventual ride up. Now, another thing I like to do with speculative stocks, if you like some of these entries, then when it pulls down, you can look at these potential entries to sell longer dated puts. Why longer dated? Well, a lot of times you need a lot of the action to take place over time before it will actually get to your strike price. And you will be paid handsomely for that because these are speculative stocks, which means you'll get higher premium. And also, if you go out a little bit further in time, maybe 3 months or more, you're going to get elevated premium for that as well. This will help reduce your cost basis of the stock so you can get the entry that you're hoping for potentially and get paid while you wait. And most of these tickers, they're not very high in price, and that helps those of you with smaller portfolios. So let's jump into the computer and let's go evaluate these stocks and see which ones might be on your wish list. First, I want to take a look at AST SpaceMobile. Now, let me show you why I call this a speculative company. If you look at the analysis tab, you can see right here that there's a little revenue, but they are losing money pretty consistently. So it's going to take a while before they are able to show 4 quarters in a row of GAAP profitability. Let's go take a look at the technicals. Back in October, they hit around $100 a share. So a 50% cut from there would put them right down here in the middle of the 200-day moving average and the 100-day moving average. So if you see it drop down to right here around 50, and that does fill a small gap that I'm looking at, that would be what would be considered a fair entry for a longer term hold. Next, we're looking at NBIS. Now I'm looking at the analysis tab, and you can see it's a little bit of a mixed bag. They do have growing revenue, which is great, but they have yet to be consistently profitable. Although they are trying, look at this profitability that they experienced in Q2 of 2025. At its height of about 140 in October of this year, you would be looking at a 50% drop right here between the 200-day moving average and the 100-day moving average. That would put you right here at about the $70 mark. I'm seeing a theme here because you do notice there is that gap here as well. So these gaps would have to be filled for it to be most efficient. Next, we're going to look at Joby Aviation. This really reminds me of the Jetsons, the flying cars. Really excited about the potential for Joby as time moves on. But right now, they are bleeding money. You can see they're not taking in any revenue. They're just now getting going. And of course, there's a cost to doing business and getting up off the ground. So this one, it's going to be a while, but its lower price allows you to get in a little bit heavier at a fair price. Let's go look at what a fair price is. Hitting a high in August of $20 at this point, that would put us at the $10 mark, which is actually under the 200-day moving average. Now, if a stock comes under its 200-day moving average, I like to see where it's going to settle, but you could consider getting in this stock at about $10 for your longer-term portfolio might be considered a really good buy. Now, I am very fortunate. I actually got into Joby when it was closer to the $5 mark, so I have quite a bit of profit built up, and I'm just adding on dips at this point. Next, we're going to look at SOUN. And if you look at the analysis tab, they continue to outperform on earnings, which is very positive. But you do see that they have revenue, but they are not yet profitable. Now, this is one that at one point NVIDIA had quite the interest in. And so you want to definitely keep this on your watch list. Let's go look at what would be a fair price for your buy and hold portfolio. Hitting a high of close to $22 right here in October, you would want to look at something around $11. So let's look at this. If you have the 200-day moving average right here at $12.21, this is very similar to what we saw with Joby. So if you go slightly under that, that might be a great opportunity for your longer-term buy and holds, or you could even look at some longer-term leaps at this point because you would be getting it at what's considered a fair value. Now, currently, this is at this point, RSI is at 33, so we are entering the oversold territory, and this one might be ready for you to go ahead and sell some cash secured puts right there at around the $12 mark, or even if you want to go further out around that $11 mark, and you might be able to get some really good premium. And finally, let's take a look at Rocket Lab. This one has been wildly popular with the retail traders, and I know there's quite a bit of premium in this particular ticker symbol. So you can see they have a mixed bag on earnings, and they do continue to increase their revenue. But again, they're not yet profitable. So there's a long road ahead for Rocket Lab, but let's look at what point you might want to set your buy orders. Hitting a high of around $72 back in October, you would want to look at entry right here below the 200-day moving average yet again. 200-day moving average is at about 36, so if it came anywhere close to that, this would be a great opportunity to sell a put or, again, set your buy orders. Now, it's important for me to share all of this with you because I hate when retail traders are purchasing a stock, chasing it when it's up here at its high. And I know at this point, they're like, it's going to the moon. Well, it is Rocket Lab, but even things that go to the moon must eventually come back. And so if you want to watch this, maybe this will serve as a great reminder to all of you to wait until a stock cools down. Really, when nobody is talking about it, is the best time to start to consider getting into the stock. And now you have some really good entries that if you were to get the stocks at these levels at the 50% off mark, you might be more inclined to hold them longer term until they mature. Now, many traders may ask, how much should I put into speculative stocks? Well, of course, the decision is yours based on the business case with the stock and your thesis on how it may perform. But if we have solid companies that are profitable, I like to restrict myself to no more than 7 to 10% in those quality companies. Something in the speculative category, I usually like to reserve no more than 2 or 3% of my portfolio into any one individual ticker that's considered speculative. Remember, if you're with me, Trading with Ashley, there is no trader left behind. And I picked out another video for you that will keep the options learning journey going. Here you get right here.